Hey, welcome investors to the 40 Finance channel. Today I'm talking about Visa stock. This is one of the top holdings in my retail stock account. And quite honestly, the past year and a half, it's been an interesting ride with Visa. Prior to the pandemic, Visa was one of the most predictable upward trajectories you'll ever see in the stock market, and a great balance of growth, small dividend, and strong fundamentals across the board. Obviously, the world changed quite a bit, and we saw a significant decline in consumer spending, cross-border travel. All these things really put a dent in Visa's short-term earnings. But now here we are heading into 2022, and in my opinion, the future looks very bright for Visa stock. So in today's video, I've got 5 points on why I think the trend for Visa stock is looking upwards, and why I will probably be adding some more shares here before the end of the year, particularly if we continue to see market weakness as we close out the year, could set up for a nice little rebound for Visa over the next 6 to 9 months. All right, the first tailwind that I think is going to work in Visa's favor, as well as a lot of other companies' favor across the board, is just the continued resurrection of consumer spending. We all know what happened in 2020. 2021 was supposed to be the big bounce back year, and while we did see things bounce back, there was certainly plenty of categories out there, in particular business travel, international travel, things like that, that have yet to reach 100% capacity from 2019. So there is still a glut of spending that has not recovered. So when you think about international travel, business travel, event spending, vacations, theme parks, all the things that sort of fall into a category of like experiences. When you think about cruises and conventions and conferences and concerts, those are big time events for Visa card spending. And remember, with Visa, it's a transaction volume game. This is not a company that is based in the debt side of consumer services, okay? It's simply payment transaction that we're looking for. And those types of events that I just mentioned, getting those back to par, and then, believe it or not, start thinking about 2023 when that grows, those categories start to grow again. You're looking at a great runway for a company like Visa who's banking on payment volume increasing. All right, so the chart here on the screen is United States consumer spending, and the gray lines are the forecast for next year, so January 2022, you got your 4 quarters. And over here, you can see 2020, no surprise that it was down, but even 2021, if you look at the front half, when we were still working through vaccines and opening things up, it wasn't that spectacular on a full year calendar view. And even 2022, I would say, is not like a rocket ship to the moon, but it certainly has increases over the year before, mostly because of these lost 2 quarters here that we saw in the front of 2021. Now, in case you've never studied United States consumer spending, the great thing about it is it pretty much goes up every year. You're going to have your little dips here and there. Obviously, this one is the pandemic. But from an odds perspective, you put United States consumer spending in some sort of 5-year bucket, for example, you better bet on the upside, because it's pretty rare to see downsides. And keep in mind, we're in this new, quasi-cashless society that was built from the pandemic and is only going to expand notably going forward. So you have spending going up, cashless transactions going up, a lot of tailwinds for the long term for Visa. All right, my next positive for Visa stock right now is just the valuation looks pretty good, even if you compare it to pre-pandemic times. So we've seen a lot of valuations and multiples expand during the pandemic with the low interest rates, stimulus, etc. So for a lot of the stocks that I've been analyzing, I've been looking back to 2019, 2018, 2017 to say, hey, where did these trade on a more normal time because you get the feel that we're heading closer to normal in terms of interest rates and Fed policy than we are shifting back into any sort of stimulus or accommodative policy. And if we go down and look at forward PE, it's just under 30 right now. And you compare that back to 19, 18, and 17, where you're riding about a 27.5 or so average. The only thing that changed this week is the Fed says that they're changing policy coming up sooner than later. But we're still going to be in a low interest rate environment. And compared back to what was going on 17, 18, and 19, this one looks pretty good. Looking at PEG ratio, you're at 1.5. And that's in line with some of what we saw a couple years ago. Price to sales at 19 times. That's higher than what we saw in 17, 18, 19. But don't forget that this is a trailing metric, and we expect Visa's revenue and earnings to grow going forward. Now, as far as projected growth rates, last year, $5.91 on the EPS. This year, coming in at $7.06. Visa is already in fiscal year 2022, so their year ends when most companies' quarter 3 ends. So Q4 for a lot of companies is the first quarter for a company like Visa. So 2022, which would end in September, you'd have $7.06 if the analysts hold true. That would be about a 20% increase, just a little less than that. All right, on the sales side, plus 17% in revenue, going from $24 billion to $28. Next year, about a 14% increase if they hit this consensus number of $32 billion. So you've got sales going up double digits. You have EPS going up double digits. You have consumer spending going up. There's a lot of good things going on when your stock is based on growing revenue, growing earnings, and growing consumer spending. All right, so we talked about the likely increase in consumer spending. We talked about, at the bare minimum, a fair valuation. And then on top of all that, you have this announcement that just came in December 15th. Visa discloses new $12 billion share repurchase program. Let me see the bullet points here. Authorization bringing total funds available for future share repurchases to $3.2 billion. So on a previous authorization, they had $4.7 billion. Of that, they spent $3.5 billion heading into December 15th. So they had $1.2 billion in change, so to speak. That rolls into this program. The only catch here is we don't know what the timetable is for these repurchases. The authorizations have no expiration date. So it's very unlikely that when you wake up tomorrow, they're going to buy $12 billion worth of stock. I would put that at 0 chance. But what we don't know is this going to go all the way through 2022, or is it going to expand out into 23, 24? That's really hard to tell, but the magic of this share buyback program comes for stockholders like you and I. All right, so I'm going to walk you through some napkin math here. We have 1.67 billion shares of Visa on the table right now, or in the market right now. And so what I did, just for speculation, is I took $13 billion and I divided it by an average share price of $225. So that's not where the shares trade at today, but you figure this is probably at least a year-long program, if not 2, maybe even 3. So I'll go with an average purchase price of $225. And what that came out to be was the possibility that Visa would buy 57 million shares back of their stock. Okay, the actual number was 57,777,777. All right, so you look at this number here, 1.67 billion. If they did spend all 12 billion to buy back the 57 million shares that I calculated, you're talking about a 30% or so reduction in outstanding shares. Now, what does that mean for you and I? Well, it's less shares to divide the company's earnings by. So when you take a third of the shares off the market, it's a big boost, when you think about the earnings per share on the shares that are still out there, right? Going from, very roughly going from 1.5 billion shares outstanding to 1 billion shares outstanding, that would be a 33% reduction. Math doesn't line up exactly like that. We're still in that neighborhood, which is a great bonus for shareholders. All right, so those were kind of 3 of my positive points for Visa stock. Now I want to talk quickly about the negatives for point number 4. And I would say there's 3 major counter arguments to, let's say, buying Visa stock. The first would be like the rise of buy now, pay later. And depending on how extreme you read on your opinions, there's folks who think BNPL is going to send Visa into negative growth because they're going to steal so much share. So you have BNPL out there. You also have the concept of digital payments, aka like a digital dollar. Not necessarily like crypto, but like a digital US dollar, a digital European dollar that would use their own kind of internal rail system and cut out a lot of the money that Visa makes. So that would be the second group of speculators in Visa's demise. And then the third group, of course, would be cryptocurrencies and, over time, those chipping away at Visa's fortress. So those are the 3 ones that, in my opinion, are probably the most prevalent. So now I'm going to share some thoughts on each one of those and how they might be overthinking it just a little bit here. All right, this is a website called The Financial Brand, and they've got a couple of good quotes in here, so I'm going to use this article. With the announcement that Amazon made in late 2021 that it would stop accepting Visa payments in the UK, some took this as a sign that the authority and centrality of the 2 payment giants was beginning to erode. Add in BNPL and its relationship to credit card spending and borrowing, and it would seem there's trouble for the 2 companies. All right, so that's kind of like the precursor I gave you. But as said earlier in this article, payment streams don't stick to their own lanes, and this is very, very important. In an analysis of the fortunes of the 2 companies, Sanjay Sekhurani, managing director at Keefe, Bruyette and Wood, suggests that the risk to the companies is overstated. Now, this is where it gets really interesting in terms of BNPL. Debit cards are the most common way BNPL installments are repaid, he points out. They account for 70% of the repayments of BNPL. In addition, he says a typical pay-in-4 plan means 4 repayment transactions via debit or credit versus 1 purchase transaction. AKA, if you buy through, let's just say, a firm, you buy a new grill and you're going to pay in 4 plans. Well, if your debit or credit card is part of the repayment structure, then Visa and certainly MasterCard is going to have you running through their rail system just to pay back what you bought with BNPL. And to top it off, they're going to get 4 payment transactions for the 1 in-store transaction you make. Sekhurani also pointed to the benefits that open banking will bring to both companies, including capture of new spending flows and enabling multi-rail money movement. During the Citibank Analyst Conference, Visa CFO pointed out that the pandemic's encouragement of digital payments continues to push up volume for Visa and other issuers. He says, as open banking becomes the norm, this will open more rails to organizations like Visa. More rails, not less rails. Our job is to enable money movement of all types. We want to help you move your money, and we're agnostic about the rails we use. And then you see the feature quote, in the past 5 years, we've gone from serving just consumer payments to P2P, to B2C, to all kinds of business to business. It's all incremental, and open banking is one way that it's facilitated. So that doesn't sound like a person who's trying to compartmentalize their business into a plastic card. That to me sounds like someone who's very intrigued with all these new opportunities that are opening up across the payment ecosystem. All right, so BNPL, not a threat in my opinion, and probably the last thing that Visa's worried about. New rail systems, including sort of internal government-operated rail system, certainly doesn't sound like a concern from the CFO of Visa. But now what about cryptocurrency, which obviously is years away from any sort of mass adoption, but would cryptocurrency bypass anything that Visa's doing? And for that, at least in the short term, let me show you the Coinbase card, proudly brought to you by Visa. Send crypto or US dollars and earn crypto rewards with your friends Coinbase and Visa. What about Crypto.com? The only crypto card you need, no annual fees. Oh, there's Visa again. Can't get away from that logo. In fact, all of the different colors, I don't even know what the difference is, are powered by Visa for Crypto.com. See where this is going. What about BlockFi? Earn Bitcoin on every purchase. There's Visa one more time. So at least when I look around the crypto world, I see a lot of Visa tentacles around, right? I don't think that they're going to make no money from the evolution of crypto. And at least right now, if you're an American-based company and you're trying to spin up some sort of credit card, some sort of deposit system to get your crypto business off the ground, Visa's probably going to be one of your first phone calls because they're going to offer you services to help you get connected to your customers' money. All right, my last point out there is some of the different optionality kind of things that could happen. One is a Visa stock split. Funny enough, back in March 18th of 2015, the stock did split 4-for-1, and at that case, it was at $248. So we're not that far off of that limit. And I'm not saying they sell when it reaches $248. I'm just saying that that's when they decided to last time. They also have the share repurchases out there, so I don't know how those two worlds blend together. But keep in mind a potential stock split, which if you're new to Visa, and you're just looking to get control of at least 100 shares, say, so that you can do options and different things with it. I have no guarantee. This is just pure speculation on my part, but they are getting close to a level that they have split in the past. All right, and on the last part of the bull case that we didn't spend a lot of time on, but sort of alluded to, is just the erosion of cash in general and how many different places that bodes well for Visa, right? I think we've had credit card vending machines for a little while now where you don't have to put the dollar in. There's a lot of places like Dave & Buster's and stuff where you put money on their cards instead of going around and paying for individual games. Those are just the simplest examples. But at the end of the day, anything that transitions from cash to digital or card or electronic or however you want to phrase it, every single time that a historic cash-based platform turns into digital, it's a boom for Visa. Now, of course, true, some of that money will go to MasterCard, and there'll be other little players that come up and capture their little piece of a huge market. But if you're going to bet on the odds, Visa has as good a chance of anyone as cash-based methods start to die out of gaining that business. All right, guys, so at the end of the day, obviously, I'm still bullish. I own Visa stock, but I know a lot of people have reached out to me and said, hey, man, maybe Visa's best days are over. Aren't you worried about this, that, and the other? And that's why I put this video together, just to show you that, actually, I'm not that worried. And in this current environment with volatility up and down, Visa represents a safer side of my portfolio, quite frankly, and I'm looking to add certainly anything close to the $200 mark. If we have a larger correction, I think my cost basis is 192-ish, so I'll buy anything and everything underneath that point with the expectation that it's a 3 to 5 year optimal return, right? The stock may go up next year, certainly in the second half. But this is a 3 to 5 year return. is what you're looking for, and the longer you hold it, the better, in my opinion. You also get that bonus small dividend that comes with it. All right, guys, let me know what you think about Visa stock. And as always, please like the video, share with your friends. I appreciate your support. We'll see you on the next one.